Good evening, everybody. All right, we're going to do a little demonstration tonight. I got Ron here with us. We've come up with a product that we're kind of making available to members of the Candlestick Forum at a deep discount price because it's all part of that process. That if we can find things that dramatically improve the probabilities of being in the right place at the right time, um, just again adds to the credibility of what the signals are telling us. So with that, Ron, I'm going to let you come on and let you explain the product. We've got people already in the process of beta testing it. Oops, there's Becky. Um, so Ron, go ahead. We're anxious to see all the details.
All right. Hey, Steve. Thanks so much. Hey, everybody. This is Ron Haight. How you guys doing? You should be able to see my screen. You should be able to see the S&P 500 with a stock score of 77, and you should also be able to hear me. So what we're going to do is, Steve's been awesome. He's giving us an opportunity to demo this to you guys, to all the members of Candlestick Forum. And on Friday, a few of you guys were able to take advantage of that. We know the site is working. It's doing fantastic. And now that we've had the weekend to test it, there were no major hiccups. We're now bringing it to you guys again, whereas I'm going to do a live demo. So I'm going to highlight about 4 major features of candlestickforum.financial.com. And if you look in the upper left-hand part of your screen, I'll even move this down a little bit, you'll see the URL. Okay, so we've made this especially for Steve's members, you guys. As you guys have questions, you are welcome to type it in. Try to keep them very specific, and I will be able to answer your questions as we go on the fly here, okay? I see there's some folks here that already tried it, like Don and Elsie, Ed. Some of you guys have already emailed in, which is fantastic. I really appreciate your feedback. What I'm going to do here is I'm going to post it in now, just so you guys have it, okay? Jim just put in the direct website. The link that I just put in that has that QR288.is refer with Candlestick Forum at the end, that is the one that you guys can sign up with. And this is how easy it's going to be. Okay, so you get about it. You have it now in case I forget. There's no credit card required. We can't bill you if we wanted to. This is you guys because you're part of Steve's group, and we have a great relationship with Steve and Pat, that we're giving you all the free trial. It's 30 days. There's nothing. You don't have to buy anything. You get full access to everything I'm going to show you and more. So if you use that link, you're going to get tagged to Steve. You get your free account. You can see there's no credit card information. All you have to do is enter your name, put your Bigelow, your Candlestick Forum email address in, just agree to terms and conditions, which of course we have to, and you hit order. You're done. We're going to email you within minutes with a password, and your username is going to be your email. It's that straightforward, gang. So super, super, super easy. All right, so let's talk about financial. We're really excited about this. It did go live to you guys on Friday and today, so no one else has seen this yet. No one. The first thing that when you come into Candlestick Forum, for example, watch this. This is what's going to happen. This is the page you end up at, and it looks just like Google. You just type in a symbol to get started. So let's just type in the spiders, and that's what you saw when we opened up. And it says a stock score. Okay, 77. This is for longer term investing. Think of it more longer term swing trading, where you could potentially be holding a stock as a trade, or even a leap long call, if you will, for months. Okay, it's what we call investor status. Now I know you guys, and I know how Steve trades, and I know how I like to trade. I like to get in and get out of stuff and hold it for a couple days. Maybe I hold it for a couple weeks, and that's a long-term trade, right? We're going to spend time talking about that next, but some of the emails that came in, they wanted that clarification. This is investor level, and right now the spiders is on a buy. If you look at something that might be in a downtrend, like Chipotle, type in CMG, well, that sucker's got a score of 22, and it's a sell. And this sucker's been on a sell for how long? Wow. buy and then back on a sell. So this thing's been on a sell since the summer of last year. Maybe their burgers are going to save them, right? All right, so I'll go back to spiders. And I want to show you one of the most powerful things that I think is here. If you go search and you click on seasonality, okay, you guys can type in any stock that you have. It has to be over $5. There's no pink sheet stocks, okay? At least $5. You type it in, and if you scroll down, it's going to spit out some automated data for you. And what it says is, over the next 13 weeks, the spiders has gone up about 2.8% over the past 22 years. It's not exactly a lot, but it is the index, right? Well, if you go to the next paragraph, it says it's gone up 2.8% in 15 of those 22 years, so it's a probability of 68%. Now, I can tell you already, because I do use seasonal analysis in my own personal trading, and I love it, 68% is not that good. It's 2/3 of the time. What I look for is stocks that will trend 80% or better. I want really, really high probability. And believe it or not, we can actually find stocks that are in the 95 to 100% over specific time frames. That even includes when the market was crashing. It's absolutely stunning. Okay, so this is what it tells you. So if I had, let's say, Procter & Gamble in my portfolio, let's type in PR, or PG, sorry, scroll down, it says, hey, Procter & Gamble is going to go up about 2.5%, probability 61%. No shocker, because there's 500 stocks in the S&P, most stocks will follow along. So this is really valuable for stocks that you might have in your portfolio already, or maybe even thinking about buying and saying, hey, what's the seasonal probability that these things are going to go up? Now, we are taking into account all the time data out there on that stock, everything. We're not cherry picking. So if Procter & Gamble went public 100 years ago, I know that's not true, all 100 years is going to be in there. If it went public just 3 years ago, well, you're only going to have 3 years worth of data. Now, something that's also really cool is you can actually move this slider and go out the next year, and you can actually see, if you wanted, if you own Procter & Gamble, when do the steep rises start coming? And what I see right here is, hey, from the beginning of October into January, P&G actually makes a nice run. Goes up about, what is that, $7, $8, $9 over the course of about 2 months. That's 10%. So it looks like maybe owning Procter & Gamble, the best time is in here. Now let's say we look at something like Yum. Maybe you have KFC and whatnot in your portfolio. Let's go out 52 weeks. It's like, okay, now I can tell you, by the way, if you follow seasonality, Yum, we've already passed the window of Yum. Right in here is when Yum went nuts in terms of very, very high accuracy, and we're almost getting to the end of that. So I'm not really interested in Yum right now. When would I be interested in Yum again? The end of October? Or maybe in February? Oh wait, that's like next year. Exactly. So if I'm holding Yum, and I'm not saying that Yum is a bad stock. That's not at all. I just want to make money. I like money. So I don't care what the stock is. But historically, this is what Yum does over the summer. If I own Yum, I'm thinking covered calls. Or if I can dump this stock as an example, and I have no tax consequences. I know some of you guys may have IRAs or things like that, or not IRAs, cash accounts where you've had it a long time. You can't sell the stock, but you can't afford the taxes. Yeah. I get that. But what this is telling me is there's no historical probability that Yum, over its life of trading, is going to skyrocket over the summer. I call that dead weight. So if I'm not going to sell it, I at least got to do covered calls for income and take advantage of that opportunity. So I hope that makes sense. Now, if you guys got questions, you can ask. Again, we come down here, we see the similar data. Now, here's where things really get exciting for me. I love the fact that I can type in any stock and get an answer on what it does historically. But when I go to screen, now it gets really cool. What I can do is I can come down here and say, all right, I want to screen for stocks that are going to move right now. I got money, ready to trade. I want to act. Now, you and I can go spend the whole weekend trying to find 2 or 3 that might look good, and then we're going to wonder if it's really going to work out, right? But we have candlesticks, right? That gives us a big upper hand. I'm a huge candlestick fan. And when folks want candlestick knowledge, I point them to Steve anyway, which is awesome, right? But candlesticks are really great. But what if we could put seasonality with it? Say, hey, we got the bullish engulfing. On the weeklies, we got great money flow. The stock just put in a higher low. It's above the T-line. That all is wonderful. What value would it be if we could say, yeah, not only do you have all that, but 85% of the time over the next specific 8 weeks, this sucker goes up 11%. It's like, wow. You know, how much stronger would that candidate now be versus a candidate that might have the bullish engulfing, it might have a higher low, but it only goes up 50% of the time. You see the difference? So let's take a peek here. Now we have some advanced filtering as well. If I'm going to do some data mining for stocks that I might potentially want to own or do leap long calls on, or 6-month long calls as an example, I do want stocks that are at least going to rise 5%, and I might even raise that to 7%. So 7%, even 20% more. I want everything. What time frame? Well, you know, if I went out 52 weeks, okay, 7% is not that much. I want to make more than 7% a year. So we have to be realistic. Let's first start at 4 weeks. So we're going to look out between now and basically the end of April. But I can't say 7% in 4 weeks. That could be a little too aggressive. Let's drop that back to 5. And the number of years, I could say, hey, just give me stocks that are 50% right. Well, I think that's a little silly. I want 80%. I really do. Share price. This is very personal. I'm going to come in here and say the stock's got to at least be like 25 bucks. And this is critically important. Minimum number of years of trading history. If we were going to look at Alibaba, the ticker is BABA, and I try to do something with Alibaba, and I get a 100% track record, we might say, Ron, yeah, that's because the stock's only been public 2 years, and the market's been bullish. It's like even a blind squirrel finds a nut once in a while, right? So to me, this is really important. I'm going to go out at least 10 years. If I go out 10 years, that puts me back behind the 2008 crash, at least as a starting point. I can go out 15 years, I can go out 20. So let's just see what happens with this data set. Minimum 5% rise over the next month, 80% of the time, with at least 10 years public. And I'm going to sort by this column so I see the biggest hitters right off the bat. I'm just going to get a Post-it note here, and we're going to write some of these down. Now, I'm just going to pick off big ticker symbols that probably the most of us know. And we got GameStop. We got Skechers, which is one that we're personally watching. Pioneer's in there. It's like, okay, Pioneer, PXD. And what I do is I'll typically write 5 or 6 of these down. I like to stay near that 10% range, but remember, we're talking about 4 weeks. We're really not going to see massive double-digit gains in such a short period. So I got Pioneer, and I got, okay, maybe that's enough. Maybe RSG I'll write down too. So 4 stocks: GameStop, Skechers, Pioneer, and RSG. Cool. Now, let's go out 8 weeks. 2 months. Whoa, look what happens when we go out 2 months. Now these gains really start rising. Okay? We got C-Trip. And by the way, what I do is I just take a Post-it note. I just go 4, 8, 12, because that's typically what I do. We have RS. Oh, wait, there's RSG again. Cool. He's on there twice. We got Cameron. That's above 10%. Anybody else that really strikes us? I'm going to say no. I mean, Edward Life Sciences is down there, but nah. Good enough. So we got a couple there. All right. Let's move it to 12 weeks, which, by the way, I would say 12 weeks is our most popular search from a personal perspective, but as well as talking to folks that were beta testing. Look what populates. Baidu. Like, seriously, huh? C-Trip again. So now we know C-Trip not just trades strong for 8 weeks, but it also trades strong 12 weeks. We got Quest. And another one that we're watching internally, by the way, our two favorites, I'm not telling you what to buy here, but our Skechers and Dollar Tree right now. Those two really got our attention to keep an eye on. And we can keep coming down here. I don't know who MIC is. Let me actually look because I am curious. Who is MIC? Macquarie Infrastructure. 500,000 shares. It's not actually that publicly traded. Okay. Ooh, UHS, that's not a bad one either. RSG's still on there. Okay. We could get a little, you know what? Let's just go out 16 weeks. Wow, Baidu is still on there. So is Ctrip. Very interesting. All right. Now, 10 years gets us by one big respin. What happens if I would go out 15 years? How would this change at the 12-year mark? So the next 15 years. Wow. Let's diagnostic and look at Dollar Tree. It's still up there, and there's UHS, there's RSG. What if I go 20 years? Remember, the more time that I use, if these gains still look strong, that's always a positive. And then I can go look at a chart too and figure this out. Look at Dollar Tree, it's still there. You know what? I'm going to put UHS on here too. All right. So now we have some very interesting stocks that go up, quite a long period of time, going back 20 years. What if we go back 30 years? Kellogg's, not too many, right? Not a lot of companies. Let's go back to 16 weeks. Let's say we're really gung-ho on Dollar Tree. We're just going to click C chart. Now what that's going to do, just FYI, it takes you back to the search box, search seasonality. We're going to move this to 12 weeks. Actually, let's go 16, 18, 20. Perfect. Beautiful. Beautiful. Oh, this is looking good. All right, let's do 40 weeks. You can see that the gain right now in Dollar Tree from here to here, that's the sweet spot. If you move your cursor over the chart, it says 17 weeks from now, that is the peak on average. So holding Dollar Tree, frankly, once July gets here, the middle of July, the end of July, the summer doldrums, August, the sucker's dead weight. And this isn't us at Financial or anyone else saying it. It's the historical data on that stock. So it can't be argued against, if you will. You know what I mean? It's either yes or no answers here. It's yes, no, good, bad. Hey, it stops right here. Now, if you scroll down, well, actually, let's do this. I want to do 18, 17 weeks. I want to make this a perfect situation. Check this out. Over the next 17 weeks, Dollar Tree on average has risen by about 20% based on 20-year stock performance. It goes up 75% of the time, 20% in 15 of those 20 years. We're also going to tell you that the holding period that leads to the greatest annualized return on Dollar Tree is that 7-week period that I actually highlighted for you on the chart with my mouse. Annualized return, it gives you an annualized return just for the point of 68%. But this actually meets a sweet spot. We're pretty close to my 80% minimum threshold. Now, one of the things with Dollar Tree is there are some years this thing goes bonkers, which is why it's at the top of our list. The chart actually looks pretty decent as well. Let me type in one of those other ones. Let me type in Skechers, which we saw in the 4-week period. And you might say, okay, it goes up, it flatlines, but then it keeps going. It's like, okay, so we can see that if we want to hold this thing for 4 weeks, actually 7 weeks, now we're at 81% accuracy, which, by the way, if you look at Skechers last year, the thing went bonkers. It went nuts. All right, let's go back and look at one of those other ones we wrote down. Ctrip was really interesting. CTRP. Let me just, wow. Holy crap. Pardon my English. Very, very interesting. Still 75%. I mean, this thing really doesn't pause. So on a historical basis, when you start seeing things like this where it's just a straight line, it really does rally into this time of the year. And then if I go out, look what happens. So I know on a historical basis, nothing to do with fundamentals, nothing to do with technicals. This is just past performance. I can start thinking to get out around Thanksgiving. So between now and Thanksgiving, all that line does is essentially go up. Little hiccup here in the summer and doesn't last very long, right? Hey, Steve, it's a good question. Typically what I look for is around that 80% threshold. We're doing this live on the fly, and we found a couple that are in that 75% area. That's still good enough for me. But Steve, the one thing I would not want is if it came in at 50% or 60%, 65%. It's just not good enough. So I hope that helps. Now, incorporating what you see on your screen, and you say, okay, let's go take a look at Dollar Tree. Let me bring up a chart here. We use TOS. Let me actually go back 2 years. It's back near these highs. The average person who doesn't know much, probably who doesn't follow candlesticks, because they are so powerful, but someone who's just looking at a chart might say, oh wow, Dollar Tree's at these previous highs. No one is ever going to buy this. And now you might think that if you don't know better, but then when you start saying, but wait a minute, we have seasonal analysis that says it actually does start to rally in Q1, Q2. So imagine what happens if it breaks out over these highs. It stays above the T line. This could be a great opportunity to get long. So I don't have to buy Dollar Tree, for example, okay, until it breaks out or until I see maybe a candlestick pattern that I really love. So I can incorporate the seasonality with the candlestick aspect and make it a really powerful 1-2 punch. Do you guys have any other questions? Because I want to watch my time. It looks like I have about 7-8 minutes here. Do you have any questions on the search function of seasonality where you guys, I just lost my train of thought, where you guys can actually type in your stock or you can actually do the screening? Now, Terry's got a question. C-Trip was down in June to October a year ago, June, October. Why would it go up in the same period in 2016? Terry, here's the beautiful thing about this. Because we're just using data that is out there for everyone, okay, we can't change the data, right? We can all have our own opinions, but the data is the data. So what if it was down last year? Very few stocks are going to have a 100% track record, which, by the way, I think it was Occidental, OXY. I think there was a 4-week period where it had a 100% record. It never lost during that 4-week period. Very, very unusual. Happens hardly ever, right? But when you talk about a 75% track record, that means 1 in 4 years it won't go up this time of year, taking C-Trip as the example. Or if we take Dollar Tree as the example, you know, from here on Dollar Tree right now, real time, into the end of July, on average, this is the time to own. Now, would I just buy Dollar Tree because this says so? I'll tell you right now, no. And I'll give you my reasons. 1, I'm a technical analysis junkie, and I love candlesticks. So unless I'm breaking out to new highs, or I have a stock above my moving averages. Now, I use the 5-day, the 20, the 15, the 200. I also use Steve's T-line, which is the 8-day EMA. I use that as well. If I have a stock that is bouncing off the 8-day, moving higher, breaking out, why would I not want to buy it? Everybody else is going to think, it's probably going to roll over, when we know different, because the seasonality says this percent of the time, let's go back there, 17 weeks is the sweet spot. We know that we're going to be 5% right. And how do we keep ourselves from being in the wrong 25%? Above the T-line, stop loss, breaking out, is volume decent? So it adds a layer of filtering to the stocks that we're already trading to say, you know what, this actually puts us in a better position. Because as traders, I guess unless we're the Fed, we have a limited amount of money that we can use at our disposal. So we're going to have 3, 4, 5, 6 candidates to pick from. And I know you guys, when when you're with Steve in the chat room, and it's been a long time since I've been in, but I know you guys go over trade ideas, right? Hey, this one might be good. This one might be good. Well, how do you pick? How do you pick which one you might like the best? Why not use this? And you guys get it free anyway for the month. And say, you know what? Based on what I see here, I like this one. So that's pretty cool. So we're really excited about it. There's one other thing here I want to show you guys. Oh, which, by the way, there's also something in newsletters under the seasonality tab where this is auto-generated. We actually have a bot, if you will, but it actually highlights. You guys can log in. This is not being emailed out yet. You can log in. Go to newsletters, seasonality. This algorithm will actually go through and tell you which stocks have a probability of trading the strongest right now. Sometimes you're going to see major name stocks. Other times they may not be ones you've heard of as much. LTL, CPL, EPI, PXJ. I think they make pajamas. I don't know. But you get the idea. Let's see. I want to hit my 4 big ones. Oh, lists. Here's something, because I really talk to a lot of traders out there. But if you're a longer-term investor, you're going to like this. The value investor stocks basically takes a lot of the criteria that Buffett uses himself. Yes, we actually know what some of that is. My business partner actually got to sit down and have lunch with him. That is no joke. But we do know some of the criteria that Buffett uses, and you can find a lot of it on the net as well. But when you look at AMBA, Google, IPGP, NetEase, NVO, some of the criteria that Buffett himself uses for good sound fundamentals, and you scroll down, we've built this in. Now, we're only going to keep it to 5 stocks. So if you're more of a value investor, I think you're going to find this really, really helpful. And then you can do your own due diligence as well. All right. Let me take some of your questions. If there's other examples or anything. Now, I do want to post in, and then I'm going to hit these questions. That is the special link that tags you to Steve, because we're not doing this with anybody else. Steve's group, you guys, are the first people to see it. You saw it Friday on a very limited basis, and now everybody that's here tonight is going to get the chance as well. There's no credit card required. There's no catch. You get to stop after 30 days. If you want to continue, you guys will get the best deal, but you have to sign up for it. And if you want to know what is the best deal, I'll even show you. This is the regular pricing on Financial's website. You're going to get all of it for 60% off, and that's if you want to stay on. But remember, you guys aren't even giving us our credit card. We just want you guys in there playing with it, testing it. We've had a good relationship with Steve for many, many, many years. I think going back to like 2009, if I'm not mistaken, 2010. So you guys get first shot at it. We really appreciate, your input. If you guys, and it's going to be in your email, we've created a special email for Steve's people. For Steve's peeps, which are you guys. That is the specific email address. So it's Candlestick Forum, it's csf.financial@gmail.com. And that will be in the email when you guys sign up. You have any questions, you just drop us an email there, and I'll be responding to you guys myself most of the time. Andrew, I'm just going to hit your question because it's right on our screen, and then I'm going to go back up and hit Terry and Roger and everybody else. Andrew's question is, Dollar Tree has a score of 59. How much attention do you pay to the score, the stock score, versus the probabilities of seasonality? Okay, this is an investor level instrument. Okay? Longer term, it's actually a sell based on technical indicators, earnings, sentiment, fundamentals of the stock, fundamentals of the market, volatility, all of that thrown in one. It's like, whoa. Yes, very longer term. We are not talking about buying today and selling it in 4 to 6 weeks. Not at all. So if I add something to Andrew's question, well, why would I consider this a buy if, when Dollar Tree has a 75% chance of historically moving up significantly right now? They're two different things. So Dollar Tree can be on a sell and we're going to go buy that sucker. Why? Because it's breaking out. It's above the T-line. And history says it goes. So, Andrew, if you said, hey, I buy stuff for 6 months at a time, I would not be all that interested right now until Dollar Tree went on a buy. It would be called the more conservative approach. If you said, hey, I want to buy this thing for 4, 5, 6 weeks, I'm going to sell the sucker. I just want money. I don't care what the score says. I'm watching the breakout and everything I just said. So, Andrew, let me know if that helps answer. Alan, I'll hit you right away. Alan says he signed up last night. Do you need to re-sign up? No. You all of Steve's people get 30 days free. No credit card required. You're not paying us anything. There is no catch. You get to totally use it. I guess the only thing I want from you guys, would you please write us and tell us what you like? I need to hear what you like, what you want added, what you want improved, what doesn't work. That would be my only request. And I would greatly appreciate that feedback. I know Larry's written in, Elsie, Ronald, a whole bunch of you guys. All right, I'm coming down here. All right. John M. I've tried twice to order, but no email confirmation. John M., check your spam folder, okay? If you have any problems, drop me an email. All you do is email me and say, hey, I signed up or tried to sign up, and I'm not getting squat. And I'll email you back tonight. I'll email you while I'm watching Villanova. By the way, I'm from north of Philly, so I'm going to root for Villanova tonight. Let's see. Alan, Don. Hey, Don. I think I might know this Don M, actually. Is the scan commodity capable? Not yet. Not yet. By the way, we already have a second series of developments. This thing took forever. You would think creating a seasonality and some of this stuff is actually easy. It's actually very complex because there's different days in the month. It changes from year over year. You just can't use the same algorithm and say the same week every year. You have to give a quality to all this stuff. It's actually very crazy. TZ Trader. How well do ETFs track? They have a bunch of different companies with different fundamental scores. ETFs can go in here, but what you're going to find though, TZ, just because I followed seasonality for many, many years, they're not going to move as much as individual stocks will. John says he found it in your junk email. John, that's one thing I can't control. Whatever the internet providers deem as an email, you know, but most folks are getting them. That's why we did the beta test on Friday. I think we only had 3 people, two or three people out of 50 that had an issue. So it is working. In terms of currencies, you can use currency ETFs, but not, you know, we're not doing currencies, we're not doing hogs, pork bellies, stuff like that. Frank, is there a tutorial on the site? Yes. Great question, Frank. Thank you. I should have. Okay, if you go back out to the front and you click how it works, this video is going to give you an overview of the entire site, okay? Once you're on the inside, okay, search is covered in that first video. The moment you go to screen, how screen works, it specifically talks to how it works. You go to lists, that button, it pops up, and each of these videos are going to play. And then you go to newsletters, it tells you how newsletters work. What about companies that are a conglomerate? Hey, they all trend. Some trend 1%, some trade crazy good amounts. So keep in mind that when you guys are looking at you know, whether it's doing the search, seasonality, or whatever, as we go through the year, different stocks are always going to be trending. You might say, well, there's no way stocks trend, you know, in the summer. Be surprised. There's fewer of them, but they're there. One of our favorite plays is every summer, the semis go down. They just do. Why? Because they do. I don't know why. I don't care why. I just like money. You know, these big funds that do the buying and selling, They just can't get out all in one day. They would move the market. They can't get out all in 2 or 3 days. So when they put money to work, they need to leave it in there to go for a while. Sometimes, and what's really cool, is if we type in a stock, let's go back to Dollar Tree. 52 weeks. Yeah, it's not really a good one. Oxy, 2 weeks. Let's try Tiffany's. Actually, no. Nordstrom's. No. I'm trying to think of something. No. Just taking a shot here at some symbols. Nah, not really. Apple's always bullish. But you can see historically that it seems that in October there are dips, and then it runs into the end of the year. You know, it's so funny how many people want to stick a fork in Apple and kill it. Like, until it's dead, you just go with the probabilities. I don't care what this stock symbol is. I just want to know there's a chance to make some money. That's all I really care about. Let's actually look at gold. I mean, I'm curious. Again, look at January. January is typically bullish, the Q1 for gold. You'll see it here again. The summer can be actually bearish. There's a dead time when it comes to gold. But then there's also spikes where you're going to see that it does well. Okay. Now, ETFs tag. Yeah. Terry, can you have the program open on your desktop and laptop at the same time in May? Because we want people testing it right now. Yeah, CB, that's right. CB saying, "Hey, wait a minute." He's laughing out loud. You said, Apple. I just said I like Apple. It's actually a sell according to the stock score. I think it is, right? It is, yeah. Apple's only at 49. But that's again, when I say longer term, I'm not talking multi-years. I'm talking out multi-months. So investor level multi-months. Apple is on a sell. And if you look how long it's been a sell. Since almost the November high. Remember, Q4 is usually pretty good. It actually topped out in November. And by the way, total off topic here, but is this classic technical analysis or what? Gaps comes back up. 1, 2, 3, 4 times it tests that gap, and then she rolls over. So Apple was actually really good right there for a bearish trade. CB just, okay, gotcha. Hey there, Bonnie, can you go over the prices again? Are you talking about ship prices if you wanted to stay on? I didn't know if that's what you meant or not. Let me give you guys the link. Oh, you did. Okay, really super fast. Pricing. We have 3 levels. This is search, or this is screen. Here, I'll show you. Give me a second. Search, screen, list, newsletter, right? Search is free. You can type 1 symbol at a time and you just get access to search. The moment you add a level, it goes up. You guys don't pay any of this because not only do you guys get 30 days free, no credit card required, you have to basically ask us to buy. You're going to get the price of $39 a month, which is the best price we're going to offer. And that's grandfathered. You're in. You're good. It's a bonus for being a member of Steve. Steve said, hey, what can my guys get? Can we give them a great deal? So Bonnie, you're actually getting the Platinum package, which is normally $109 a month or $99 a month if you buy a whole year at a time. You're getting everything for $39 if you want to buy after 30 days. We're going to send you an email when your membership's over, right near the end, and say, hey, I hope you guys have enjoyed it. If you're interested, you're going to get Steve Bigelow's price of $39. It's the best we're going to offer, and it's everything. So it's everything you guys get access to now. Does that make sense? And it's the best deal. Remember, you have to ask to get it. We're not charging your card because when you guys sign up, all is your name, your email that you use at Candlestick Forum, click I understand, and you're done. That's it. No strings attached. Dead serious. I'm going to give you that link one more time. I'm going to turn this over to Steve. Steve, I'm sorry. I lost track of time, and I just kept babbling here. So I think I hit one more question, Terry. If I subscribe after the free period, will I be able to? Yes. Okay, Terry. Can I go back to the start of 2015 and see the prediction we've been for the next 6 months? In terms of back testing on this screen, no. We're only looking at what the time is now and moving forward. So when you ask about back testing, Terry, the idea is because of seasonality, it's already, quote, built in, that we're actually giving you the percentage that it goes. If you wanted something to go back testing, you could use Thinkorswim. Go back and use ThinkBack. And then start, going to town that way if you wanted to. One other thing, using the seasonal analysis, I can actually incorporate leap options instead of buying stock, or 6-month options. Let's say 6 to 12-month options if I'm going to hold stuff for 2, 3, 4 months at a time. And it's a fraction, the cost. Terry, how accurate have your projections been? Terry, it's seasonal analysis. So I don't have to, every single thing can be audited. This being the software, it's accurate 75% of the time if it says it's accurate 75% of the time. That's the beauty. I will say this, though. When you start seeing the 90% plus accuracy ratings, that's where it really gets super interesting. And even if it's 75% or 80% or 90%, if the average move is 10% in a 1-month period, you can use an options chain and extrapolate that right now. You can calculate the theta decay over the course of the next month. You might say, okay, the option costs $5. Theta decay is going to cost $2. Stock went up $5. I'm making $2. So you actually know on average what the return would be. Just go to the options chain and figure it out. You could be talking 10%, 20%, 50% or more. Typically what you see is if there are 10% moves in a 1-month period, that's usually when the returns get close to the 100% or more range. And that's what we've seen in the past. But all of it can be completely audited. I would say ThinkBack is the best way to do it. Go back to that time frame at that year. Okay, Steve, I'm gonna stop talking. I am so sorry I took up more than the 30 minutes. I really appreciate you having me in here. If anybody has any questions, I'll stick around for a little bit, answer some, and put the link in. But otherwise, I'd like to stop talking if that's cool, Steve. I don't want to take up any more time. So I really appreciate everybody.
No problem, Ron. As long as people have questions, we'll keep going. If everybody has their questions answered, we'll just flip over to our normal session, which will obviously be shortened. But the reason we've linked up with Ron on this is, once again, we're trying to enhance the membership value in the sense that if we can keep finding information or things that dramatically improve the probabilities, if you can see a good candlestick chart and then able to go back and see what does this chart usually do for the next 3 weeks, it just is going to add more probabilities of being in the right trade at the right time. On the other hand, you can work it backwards, and you can see, you can pick out which stocks are going to be up 80% of the time over the next 3 weeks, and then take a few of those and start looking at the charts to see whether there's some good buy signals on those charts. So it just improves the universe for using candlesticks to identify where there might be a good strong trade over the next X number of weeks or whatever time frame. Okay, thank you, Ron.
All right,
and we will
thanks.
be playing with. Yep. And so what we want is everybody that is using this free. We want feedback. We want to see what how it works for you and how we can incorporate it into finding better trades. So anyways, this is good stuff. Yeah, as Ron is saying, there's no strings attached. This is for us to be beta testing for the next 30 days. Okay, with that, Ron, thank you. And Jim, what I would do is bring up my screens here. Just that the interest rates aren't going to be doing a whole heck of a lot. So with this type of market, ooh, there we go. With this type of market, as long as we've got this slow, steady uptrend, which is looks more like this, but nice steady uptrend, that puts us in situations or allows us to participate in, let's just move this over here, allows us to identify the chart patterns that are going to work as long as there's no dramatic change of the market direction. So, for example, when we were recommending CSII last week, with it slowly curving back up out of a fry pan bottom, with the market not changing direction, it just gave us a better probability that it could work because there was nothing changing in investor sentiment, and the investor sentiment building up in a chart like this was telling us if it broke out, we'd probably have a good, strong price move, which obviously that happened. So before I get too far ahead on that, let's just take a look at some of the things. This is crude oil. Still kind of in this. I don't know whether I can do a... No, Pshaw. That's where right about where we are right now. It's at the bottom of this trend channel with stochastics going into the oversold area. So does this mean anything? What it means is we're at an area that now starts warranting watching for a reversal signal. And if there's a reversal signal right in here with stochastics in the oversold area, tells us, all right, we see something. That means that's why it was reversing here, because of this trend channel. So we're not looking for a buy signal. Let's see, how do I phrase this? We're looking for this area to be the potential of seeing a buy reversal signal because we know that everybody else is watching for a trend channel. TZ, he doesn't have to. The software is so simple. Just type it in yourself and see what the projection looks like. I mean, the nice thing about this program, on top of being very inexpensive, it's very simple to use. It's you don't have to have a lot of user-friendly knowledge. Just type it in and it's automatically going to show you what the projection is historically for the next whatever time frame. This is not good in the sense that these charts are a little bit slow tonight. That's not going to be great news. Well, shuzzbutts. Now let me see if it's the whole system. Apparently it is. Well. Okay, stocks are coming up all right. All right, so right now I'm in the process of revamping our gaps videos to kind of get more into the detail of analyzing when a gap works. And one of the processes or one of the analytical factors is there's a gap up. But remember the other day, I can remember the other day when it gapped up and started backing off, everybody's question was, well, that doesn't look very good. However, you've got to take everything into context. Number one, you had a gap up. That should be your first message. And that's why we call this type of signal a message. Because even though it doesn't look good, there's a message there. And that is, they came into this with great enthusiasm. And there was some profit taking. Yes, the doji and the gap up. There's your best friend. So, number two, look where it gapped up. Right off the T-line /50 and gapped up. So that still makes it a good preparation that there's going to be more upside. But then, because of our knowledge of the patterns, look what type of pattern it was coming out of. A fry pan bottom. And where did this gap up? Right about in the same area that the indecisive trading of this fry pan bottom trajectory started. So even though this was a gap up and didn't look very strong during the day, that's just that day. The whole pattern, based upon that information, they're breaking out with a gap up. Should have told you, get ready for more upside. Where's their next logical target? Right about here, which is exactly at the 200-day moving average. So this is why I want everybody to kind of learn that a signal has information. Now you start correlating all the other information that you can visually see on the chart to add to that to that analysis. And that's why I strongly recommend just taking time out and learning the 12 major signals and learning the 6 or 8 patterns that are out there. Because anytime I see something that looks like a pattern, for example, notice our scoop type pattern here. And how did the scoop type pattern start? With a doji gap up again through the handle and through the 50. What do we expect coming out of a scoop pattern? Well, if we get strong indications, there should be a strong slingshot effect. And how long do we hold these trends? Until we start seeing sell signals at the top. Now, with the gap up doji today, I just pick a very simple spot like today's low. If it came back down through there, the profit taking started. Where would you place a sell stop on Arcadia's first move? Where would you place a sell stop on ACAD's first move? I don't understand what you mean by its first move. Now, if you own this, where's the anticipated target? The first gap up, if it had come all the way back down into this range, that told me they weren't, once they gapped it up, there wasn't any enthusiasm there. So probably back down into the below the open of this candle would have told me, that's not a very powerful move. Now, the next day, had it started trading back below here, I might take profits, but what would be my criteria at that point? I'd watch to see if they still kept it up above the T-line. MKTO. This is one where you might have taken profits right here, but then got right back in. Why would you have gotten back in? If I can do this. Yeah, it doesn't 2 days. Because what was happening here when it came back up above the T-line, you could start seeing this rounding trajectory, and they were trying to come back up to the 50. So, plus the fact that here was indecision, and in the ultimate analysis, once again, you had a little doji gap up that brought you back up above the T-line that was also confirming this rounding bottom. So this is why you want to let the whole chart tell you what to do and let the little pieces, each signal, kind of confirm or add credibility to that analysis. AXDX. What makes this an important analysis? But you wait to enter until past the 50. Oh, what was that on? What was that on? I forget. ACAD? Oh, what else? This one? Oh, no, not necessarily. You could if you wanted to, but I'd be buying back here because you could start seeing where it was probably going to. That you did have a fry pan bottom. So you only had one day where it really closed below the T line, indecisive, and then a bullish confirmation telling you this curve was coming back up. So if I was buying right back in here, yeah, I'd be a little bit more diligent to see whether they were going to get through the 50 or not. So essentially it boils down to, if I can analyze, again, if you cut this chart off right here, or right here, and then right there, what was the trajectory of this chart starting to do? Doing our slow curve fry pan bottom, coming back up toward the 50. So if it told us it broke out, or went through and broke out, basically tells us our uptrend's still in progress. Worst case scenario is you get back in, and you get another sell signal right here at the 50, telling you it was acting as resistance, you get right back out again. Let's see, what did I do? ADAX. Oh, so here's one where the kicker signal took us up through the 50. Now, number one, look at the drift, and when did this drift stop? When you had the kicker signal kick in, and how long do you hold on to this one? Until you see a sell signal. This one's even a more compelling chart based upon the kicker signal. This is FIT. Had a kicker signal, took you up through the 50. So what all can we put into this analysis? First of all, the kicker signal tells us there's a strong reversal. Secondly, we can see that it's created the bobble. Came up, failed right here at the 50, pulled back, starting back up again. There's our bobble. What's our confirmation? Kind of a doji sandwich. And what do we expect coming out of a doji sandwich? That there's going to be more upside. If there's more upside, what's this tell us about the whole chart pattern? Pretty much we have a bobble J-hook pattern breakout. We're probably heading higher. Now remember, Sean, when you're looking at them on Franchell, you're looking at them on what is their probabilities of what they should be doing based upon what they've done in the past. Now that doesn't negate, that doesn't become your criteria of getting in or out. This is just added information to say that, which one were you looking at? AXDX. Right now with a kicker signal, even though in the past it may not do very well, right now it's telling us You still go with everything that you so yeah, Ron just kind of stated it. So you're still, every time I mention buying or selling a trade, got to remember which is the number one criteria for making the decision. And the number one criteria is always, what is the signal? Then we go, where are the stochastics? Where's the T-line? Where's your support and resistance level? Everything else after the signal itself is now comes into play. So again, there you're going to use two aspects of the charts or of Franchel. Is what's it likely to do? And yeah, Ron, what it's likely to do. So right now we use the candlestick signal and telling us that right now this one is going against what it normally does based upon that signal. Now, if you flip it around and do the scan by which ones have the biggest probabilities of moving up over the next 2 weeks, all right, you get those top 4 or 5 percentages, and you take a look at those on the candlestick chart and see if any of those have good buy signals. That's now looking at a universe that has good probabilities of moving up during whatever forward period you're looking at, and then finding which one might have the best candlestick signal to confirm that. Labu, as you can see what's happening here, you got that fry pan bottom, kind of your bobble. Makes us very, Ron, as you can see, is kind of answering questions as we go along here. This one you get ready to buy on positive trading tomorrow on a doji sandwich breakout. That same scenario was what we were kind of discussing on this one. Here's your fry pan bottom. Notice what they did right here at the breakout level. They gapped it up and did a doji. If it opens positive tomorrow, what do we have? Doji sandwich breakout going into wave 3. So this is why I was trying to buy calls on the close today on the speculation that if they open this positive, they could have another big day like this, making for a very good quick profit. This is where you can, on a day trade basis or an option trade, where your timing becomes right down to the hilt. As far as knowing exactly what it should do. Where would I put a stop on Labu if I was buying it tomorrow? If it opened positive, what wouldn't we want to see it do after that? I come back down and close below this level, because now you have a bearish engulfing signal right at the same level as it topped out before. That tells you it's not breaking out. It's probably going in still in a sideways mode. So again, that's kind of extrapolating visually that if it opened positive and closed down here, what do you have? Now you've got a bearish left-right combo at a breakout level when you should be looking for a doji sandwich breakout. And Kara, another one that did a doji right smack dab on the 50. If it opens positive tomorrow, what do you have? First of all, it tells you the 50 is not acting as resistance. Secondly, it's moving in the direction of how they open it after a doji. Third, it's got the prospects of doing a doji sandwich, which tells you they're breaking out through this level. That tells you that's the time to be buying. Okay. Let me see if we had any luck. Yes. We've been shorting lean hogs. It wasn't the greatest trade, but look at where it closed today. No, if you signed up Friday, you're signed up. Again, this is so everybody can have a free access to this to test it. And as Ron said, if it's something that you like afterwards and you can use it, instead of being $99 or $109 a month, it's going to be $39 a month, which will be kind of peanuts on the basis that it acts now as a very strong scanning technique for finding which trades might be acting the best for whatever time frame you're going to be trading, or the future from wherever you're trading. So this one, you can see that the stochastics, this is lean hogs, June lean hogs, stochastics are still heading down, and we're sitting right smack dab on the 200, which is acted as a support level here. So if it opens positive tomorrow, we close out the short position. If it opens lower, that tells us this big wave is still in progress. And KCAK6, which is coffee, got a little bit testy up here, but finally went to the area. Now, we're not in it because I closed it out with it trading too strong on Friday. And I wasn't around enough to say when it opened lower today, you could reshort it, because that would be your next target down here at the 50. But right now, even in the commodity market, where you might not find anything that's real dynamic. Here's the dollar. It looks like it's still in a downtrend with a couple of days of consolidation. We're going to be watching to see if it comes down through this level here. That tells us we're heading down to the bottom of the channel. The dollar is still selling off. The transports came back and hovered right on the 200 again today. So that's telling us that we don't have a lot of strength there. We have a possibility, if it opens lower tomorrow, of pulling back some. But this is kind of the analysis that if you're in an uptrend and it pulls back and starts back up, what are one of the things that we want to see to tell us that the uptrend is still in progress? And that is that we want to see it come back up and get to a new high. We can see immediately they didn't do that. So right now, there's not any strong buying in the transportation index, which basically tells us that if there's not strong buying in the transportation index, that your uptrend in the other indexes, although moving up, may not be moving up with any great resiliency. We don't know if it's topping Charles or not, as long as we're staying up above the T-line. Again, we'll just use the T-line to tell us, because there's been times when it's pulled back, like right here, didn't get below the T-line. Pulled sideways over here, didn't get below the T-line. So we still have to observe the obvious. And the obvious in this case is the T-line has not been breached yet. It's waffled up here. But as long as the overall steady uptrend remains in progress, just kind of anticipate that even though there may be backing and filling on particular days, there hasn't been a change of the total market trend. Hold on to the individual stocks. We'll do some at the end here. Let's see, gold. Gold, I would suspect it's getting there, because look where it's pulled back to. Right now on the 50-day moving average, getting close to the oversold area. I'm still watching gold. If it has enough strength to break back up through this level, that tells me they did bounce it off the 50 and they're going into wave 3. And cocoa, just want to show this to show how clear the signals are. Nice steady uptrend. Went through the 50. And when it got up here to the 200, And that's just as clear as a neon sign that you have an evening star signal, and then the next day they confirm the evening star signal by opening below the T-line. We're in a downtrend until you see a buy signal. Okay, let's just flip back over to the, oh, who the heck writes these with such terrible handwriting? I don't even know what I wrote there. There's that scoop pattern. Now, in the afternoon newsletter today, I kind of illustrated that if you trade the patterns, you've got two things going for you. One, usually the return coming out of a pattern is going to be much greater than just buying an uptrending stock. And two, if you've got a pattern going and all of a sudden there's a drastic change, let's say they turn the market around and it's down 300 points tomorrow or 190 points, something like that, sells off hard, the patterns aren't going to sell off that much because you got to remember, these are based upon something that's not fully connected to the direction of the market itself. It doesn't really matter what the market is doing. The pattern is doing it on its own. And usually, again, if you take the very puristic evaluation or definition of a candlestick chart or signal, it's the cumulative of everybody buying and selling during the cumulative knowledge of everybody buying and selling during a particular time frame. Well, it doesn't matter what the market was doing. This pattern was setting up on its own. So it may still be heading up even if the market has a big crunch over the next couple of days, because something in here is making it move despite what the market's doing. So essentially, trading the patterns gives you two great benefits. One, it gives you a much greater return when it works. And number two, when the market turns sour, you probably still have a good amount of time of getting out of the trade at a decent price. Yes, that is a scoop. You can see how there's a flat handle. There's your scoop, which should have a slingshot effect coming out the other side. NK, that was just a fine howdy do. I looked at this chart last night and said, you got a T-line crunch and then a left-right combo right here. I should recommend this one. I thought, I'll see what it does tomorrow. And what it did tomorrow was up about 15% on the day. This one can still be bought. You can see the kind of the semblance of that fry pan bottom. So, and here's another one that broke out nicely through the bobble. Again, the left-right combo that closed right on the T-line. This one I was looking at also to say if it, I was going to think about using this one as an option trade, because if it opened positive today, breaking through the bobble after a left-right combo and a little T-line crunch, it probably has a good strong move. And why does it have a good strong move? Because everybody and their brother is watching to see what it's going to do with the 200. If it breaks through, which we could see had a good inclination that it was going to, and everybody starts jumping in. So this is just kind of a reiteration of why the patterns work effectively. Look at the little wedge right here, the bigger wedge right here. Now the gap up, there's your message. You just watch to see when the profit taking is over, because it opened up today and then traded lower after the open. Watch to see when the profit taking is over. You're probably going to get a good trend out of this one. GRPN, Groupon. This one is your best friend. Look where it supported. Look where your doji was. Look where the gap up was, your best friend. And notice what they did with the T-line. Gap through the T-line, then use the T-line as support. I wouldn't doubt you couldn't be in wave 3 on this one. You're probably going to see that one on the recommended list tomorrow. ARRY. Oh, we wrote that one down earlier. This one confirmed. It's done everything that you would like to see it do. Had a belt hold type signal right here as it was coming out of this fry pan bottom. Open positive and traded off. Very, very easy entry strategy. Put your buy stop at today's open. If it comes up through there, what's it telling you? First of all, it's confirming your belt hold. Secondly, it's going to be breaking out through this level. And third, it's going to tell you this fry pan bottom is in progress. You're now in new territory, no man's land. Got a lot upside to it. FOE was getting ready. It was trading positive earlier today. But here's another one. You put your buy stop above today's high. That you, if it breaks out through this level, your bobble is in progress. Whoops. VNTV, yes, that is a belt hold. And this is a good illustration, Diane, to say when this opened up yesterday, it was on the basis of, no, it's Friday. What is today? Monday. I got it. Wow. When it opened up Friday, it opened up lower because I think Goldman had downgraded it. But this is a perfect example of why you don't listen to downgrades, why you don't listen to Kramer, anybody. You let the market tell you what it's doing. So when they opened this lower and brought it after a downgrade and brought it right back up, I mean, observe the obvious. Where was the strength in this trend? It was still with the bulls. They downgraded this stock, a major downgrade from a big firm, and they were still buying it. So what did this do right here? This probably wiped out a lot of sellers. You see how it was trading up indecisively? They've wiped out a lot of sellers. Here's another one that if it opened positive tomorrow, it can probably be a good quick trade because you'll have a doji sandwich kind of breaking out through this whole congestion area. So that's why, again, the belt hold is a very important signal to be aware of, because just knowing what should happen afterwards and understanding why it's happening, number one, is pretty much telling you they've gotten rid of a lot of sellers. Now the new trajectory or the new trend will be a lot stronger because there's no sellers in the way. I'd be a buyer of this one, anticipating this is now. Next target up here at the 200-day moving average. TXMD, a gap up doji right at the 200 after a left-right combo makes this so simple. If it opens positive tomorrow, you can be buying immediately, and then you don't want to see it close back below today's open. You don't want to see a bearish left-right combo at the resistance level, but if it opens positive with your stochastic still heading up, you're coming out of a fry pan bottom, they gapped it up to a resistance level, and then continue to trade it positive, it's going much higher. Why? Because they gapped it up. Somebody wants back into this with great resiliency. Scotty closed. SCTY. There we go. Yeah, did look a lot different. Scotty coming back up through the 50. Kind of did the little bobble in here. Another one you could be buying on wave 3 positive open tomorrow. And GNCA, this one, notice what's happened here. You had the kicker signal, you failed right at the 200. Profit taking. Now you're bullish Harami. What's that pretty much tell you? The profit taking's over. Get ready to start buying. kind of the same scenario as ALDR. Big gap up, profit taking. Now I would suspect if it's open positive and trade positive, you had a J hook. Right now I'd suspect you're in the 45-degree pattern. And what do you do with this one right now? You just stay long as it doesn't close below the T line. So this is why you look for things like this. You may not know why they're starting to buy. In this case, it could be a buyout. It could be somebody getting their phase 3 approved in the biotech area. Doesn't matter what the information is. We don't have access to all that information out there. What we do have access to is what usually happens in a price pattern. So there's our fry pan bottom breakout. And if you're worried about buying a stock that's up that much, put a little bit of money out there. Buy a inexpensive call just above there and see if it'll move up to that area. I bought calls on this one. Why? Because there was our best friend breakout. How long do we hold on to VNTV? As long as it doesn't close below the T line. And what else we got here? Oh, for crying out loud. Oh, it was EW. There's that fry pan bottom. Big breakout. Okay. On the other side of the coin, if you're looking to short things, there's your bearish kicker signal and baby. Pretty hefty move to the downside, almost 25% today. But what's the expectation from here? It's probably still heading lower. How far out on calls? Well, I mean, we were buying the Aprils back here. I only have 2 weeks. At this point, because you're within 2 weeks of expiration, what makes more sense now is probably doing a call spread. And that might mean something like buying the 55s and selling the 57s or the 58s. Because we got the potential of this type of move. Just depends on what our timing is. But so a way to modify that risk and get better leverage on your trade with having less money exposed is to do a spread with only 2 weeks left to go. Yes, same principle that if you don't know which way a price is going to move, one way or the other, buy a far out inexpensive call or put, because if it moves big, you're probably going to get a big percent return. If it doesn't move, you didn't have that much money exposed to the trade. Smith & Wesson also got whacked today. Another one that probably has a good probability of coming back down. And again, there's that kicker signal. So remember, on a kicker signal, there's been a dramatic change of investor sentiment. And usually on a bearish kicker type signal, it takes a while for that sentiment to turn around again. There's going to be a lot of pain during that trade. ATI, Allegheny Tech, has a good possibility after the little gap down today that you're coming back down toward the 50-day moving average. OIS, there's your bearish flutter kicker. Another one that more than likely is coming down to the 50-day moving average. And Genco, there's your bearish J-hook pattern with your bearish flutter kicker signal. So if wave 1 was from basically the 24 to the 20 range, that should take you well down into this area. Okay. Whoops, we're way past time. Are there any questions, general questions on candlesticks? All right. Just what we're going to do tonight is everybody just has one stock request. Jim, go ahead and do the double line. All right. And do the next double line so we can stop the scrolling. EXPE, stay short. Now, just be aware that you're right here on the 50 and you're getting to the oversold area. So if you're short, just watch to see if they start wobbling right here at this level. Lending tree, you stay long. You got the little slow curve starting to break everything out to the upside. Oh, man, I missed a bunch here. Okay. Apple. Apple had a hard time getting up through the 200 today. It got up there and came back. So this is why I'm kind of suspecting we might be seeing some profit taking here for the next few days, because a lot of the stocks have moved up to their targets and may see some profit taking. Tesla is going to open up somewhere down here, so I'd suspect they're going to be waffling back toward the 200-day or to the T-line area. And Whiting, even though crude oil is down $1 today, it's holding up pretty good. So I wouldn't be afraid to be buying this one still on positive trading tomorrow, just because of the simple doji rule. PTCT. A gap too far. Fill at 18. Well, the other side of this coin, though, is look what you've done for the last month. Very flat, indecisive. Now you're starting to slowly pick up some steam. And what happens when you have that big of indecisive stage? When they come out of it one way or the other, it's usually with some great force, because that decision after that indecisive trading stage has now been made, and that decision usually acts pretty strong. HCP, another slow curve that you can be buying on positive trading with the anticipation the 200 is your target. What did I just do? NTCT, all you can do right now on this one is stay long as it stays above the T line, which in this case it means it has to open positive tomorrow. Lexmark backed off today, but backed off right to the T line 200. So what we definitely need to see tomorrow is it open positive and start trading positives. What happened here? The typical. When it came up through a resistance level, let's come back to test it and see if it's going to act as support. So that's what we'll be able to see on how they open it tomorrow. AKRX, there's your bobble getting ready to happen. Very easy trade. If it opens positive tomorrow, you can be buying it immediately. Best Buy. Best Buy is having a hard time getting out of its own way. Number one, it doesn't have a real prolific movement to it here recently. If it opened lower and you were long, I'd be out of the trade, because you could see that it's moving sideways at that point, waiting for the 50-day moving average to catch up. And Flowers Industry, I'd get ready to go short on this one. That's a good-looking short. You can see where it's failed. And let's take a gander here at the overall trend. Ever since that gap down, your trend target could now be back down in this area someplace, or say even test in this area. SSO, the S&P, just stay long as it stays above the T line. And Halo, another one that can be bought on positive trading. If you own it, you stay long as it doesn't close below the T line. And Southwest did a left-right combo today, which means if it opens lower, where do you think they're going to bring it back to? Back again to see if they're going to test the 50. Nike stays short. This one just doesn't have a good trading chart because you're right now back to the bottom of the trend channel. Yeah, I'd be trading something else other than Nike at this point. This doesn't have any direction. Con is another one where if you were short, you're in the oversold area. Right now, it's telling me that it doesn't know which way it wants to go. So if I was short, I'd close out the position. Then I just put a sell stop again at these lows. If it comes down through there, it's going to take another big flump to the downside. Otherwise, if it starts moving up, you don't start looking to buy it until it gets back up above the T line. We did Tesla. Tesla is going to open lower from what it looks like. Now, if that's the way it was after they announced that they missed their production by 2,000 cars, but that's what it looked like. I still wouldn't close it out. Well, if it opens down that low, I'd probably close it out and then just wait to see whether they're buying or selling after that point. RGR, right now, all you can do is stay short, the 200 being the target. Amazon got a little bit soft today, but you're still in the uptrend, so you just stay long. Nimble, you stay with this one. Another one that I'd be more apt to be buying based upon, you can see exactly where it was supporting right off the 50-day moving average. You can see what's happened once it got down here, more buy signals and the trajectory. I'd be a buyer on strength in this one. And CFMS backed off today, but closed right smack dab on the T-line. Doesn't make for a very good chart, which means if you held on to it, it has to open positive and trade positive tomorrow to stay in it. If it opens lower, it's coming back to test the 50, but that means your trajectory's gone sideways. Is there a Candle Forum newsletter? We put it out on YouTube every Monday and Thursday. And then, TZ, you should get the morning comments each morning and each afternoon about the market. Okay. You have to see what the market does tomorrow, but as long as we stay above the T-line, right now you stay long, just have your finger on the trigger. So right now there's nothing in the futures market that looks real attractive. The only thing that I could suggest to people is stay with the patterns. Something like FIT that has a kicker, doji sandwich, bobble, breakout. If it opens positive tomorrow, you can still be buying this one. All right, everybody. Have a good evening. We will see you bright and early and bright-eyed and bushy-tailed tomorrow morning. We'll see you then.